Good morning, grade 11. So today we will be doing the bank reconciliation with Mr. Spesihle Mongezi Ngobese. There is my Twitter handle at Mongezi Ngobese. My email address spengezi05@gmail.com. Topic will be doing the bank reconciliation statement, right? Let us look at the learning outcomes. What is it that you are expected to know at the end of this lesson? You are expected to know what is the bank reconciliation statement. You'll be able to define what is a bank reconciliation statement, right? And the internal controls of the bank reconciliation statements, right? And also you'll be able to know what is a bank account, what is a bank statement, the check, the reasons for preparing the bank reconciliation statement, and also you'll be able to know what is an outstanding deposit, what is a check, and also the internal controls associated with the outstanding deposits and also the outstanding checks. Right? You'll be preparing on calculating. You'll be preparing the structure of the bank reconciliation statement. At the end of this lesson, you'll have a clue of how does the bank reconciliation statement looks like. Let us watch and listen to this video. So here they were doing what? All right, let me do this. Trying to share my slides. There you go. I'm having problem with my slides here. Okay, let us just skip this one. Right. Miss Mani, the student of the Walter Sisulu, received a money by mistake. Right? A Walter Sisulu University student accidentally received a whopping 14.1 million, right, from NSFAS, right? This student received this money by a mistake, right? If now the student used this money, right, and as a result, she was arrested, Now the question that arises now would be, if you were the student, the one who received this 14.1 million, what is it that you were going to do, right? So if you are thinking of that you would have used the money, then you were obviously been arrested, right? Since Miss Money was arrested for using the money, since she used 810,000 per day, she was spending approximately at 11,000. She spent 810,000 of this 14.1 million, and as a result, she was arrested. Right. So, what is the right thing to do? It's to do not use the money, right? So if you receive the money that is being deposited into your account that you do not know of, you do not need to use it because you can be arrested, right? So Miss Money was arrested, but the accountant who deposited this 14.1 million into her account by mistake was not arrested, right? So the accountant was not arrested, but Miss Money, who received this money by a mistake, was arrested, right? So it's not her responsibility that it wasn't her intentions to receive the money, but for the fact that she used the money, she was arrested for doing so. And the accountant was not arrested. Why was she or he not arrested? Referring to why the accountant was not arrested. The answer to that, it is only because the accountant made a mistake. So in accounting, we do not arrest or fire any the accountant if they made the mistakes, right? In accounting, an accountant is arrested and or fired if and only if they are involved in fraudulent and or corruption activities. So in this case, they only deposited 14.1 million by mistake. There are no fraudulent or corruption activities, right? Therefore, the accountant will not be arrested or be fired, right? Only the person who received this money will be arrested if they used the money, right? Similar to Miss Money's case. Now, as an accountant, you were supposed to deposit 1,000 into my account, but you accidentally added zero and it became 10,000. That's what
Hi,
happened. Hello?
sorry. We can't see your slides. I don't know what's happening, but it keeps going back to your desktop and not your slides.
Oh, okay. Let me try to do it again. Can you see that now?
Yes, now I can see. Thanks.
Okay. So I must start afresh, eh? Or must I just continue?
Yes, please. Yes, you can start there.
Okay. Right. So this is Miss Money, the student who received 14.1 million from NSFAS by mistake, right? This student was arrested because she used 810,000 of this 14.1 million, right? It wasn't her fault that he received the money, but she was the only one in this case who was arrested. The accountant who deposited this money by mistake to her account was not arrested, right? So today we'll be looking at what are the things that resulted to Miss Money being arrested and how to avoid all those things. So the bank reconciliation is all about avoiding these errors that can be these errors and omissions, right? That can occur. If you were the one who received this 14.1 million, what is it that you were going to do? Were you going to use the money or were you going to report to the bank, right? So really, if we were going to use the money, as a result, you would have been arrested, similar to Miss Money's case. But if you would have reported the matter to the bank, you wouldn't have been arrested, right? Miss Money wouldn't have been arrested if she reported the matter to and consulted the bank, right? She was arrested because she used 810,000 of this money. Per day, she was spending at approximately 11,000. Right? Miss Money was arrested, but the accountant who deposited this 14.1 million into her account by mistake was not arrested. Right? Why was the accountant not arrested? Right? It is because the accountant made a mistake. In accounting, we do not fire somebody or arrest an accountant if they make the mistakes, because mistakes happen, right? So we only fire accountants or arrest accountants if they made any fraudulent or corruption activities. In this case, the accountant only made the mistake. They added the zero from 1,410 to be a 14.1 million. So the mistakes happen. Therefore, the accountant should not be arrested for making the mistakes, right? In accounting, an accountant is arrested and or fired if and only if they are involved in fraudulent activities and or corruption activities. So if they make the mistakes, they won't be arrested, right? Now, if you were there to be an accountant and you were supposed to deposit 1,000 into my bank account, but you accidentally added zero and it became 10,000, right? Then 10,000 is being deposited into my account. Then you notice a minute later that you made a mistake. What is it that you are going to do? You are not going to remove a zero, because zero won't change yes, it does change 1,000 to be 10,000. But now for the fact that 10,000 is being deposited into my account, removing a zero won't change anything. So what you need to do is to withdraw 9,000 so that I can be left with my 1,000 rand. I hope you guys understand what is it that I'm saying. You must withdraw 9,000 so that I can be left with this 1,000 that was supposed to be deposited into my bank account. So today we'll be dealing with correcting the errors and omissions, such errors and omissions, right? We'll be checking the balances of the bank account and the balances of the bank statement, right? Now let us look at what is it that Miss Money was supposed to do. She was supposed to consult the bank and tell them about this mistake so that the accountant will then correct the mistake, right? The accountant, in correcting this mistake, the accountant would withdraw all the money that was deposited by a mistake. So the accountant would have done similar to this, would have withdraw all that money and leave 1,410 rand that was supposed to be deposited into Miss Money's account. Right. In accounting, the process of correcting these errors, mistakes, and correcting the omissions is referred to as bank reconciliation. So if we are correcting the errors, the mistakes, and the omissions that occurred in the bank statement, in the bank account, that process is being called or being referred to as the bank reconciliation. To correct this, or to check whether are there any errors and omissions, one must prepare what the bank reconciliation statement. So in a process of doing the bank reconciliation, we need to prepare what we call the bank reconciliation statement. We need to prepare a certain statement that is being called a bank reconciliation statement to do what? To correct the errors, mistakes, and also the omissions. Now let us look at what is the bank reconciliation. In a process of preparing the bank reconciliation, this is what you need to know. That the bank account, is it an asset, equity, or liability, right? We all know that a bank account is what? Is an asset. So it increases on the debit side and decreases on the credit side, right? That's what you need to know. And also, what you need to know is that the bank account is being prepared by the business, right? Assets increases and decreases on which side? They increases on the debit side and decreases on the credit side. I've already outlined that. Now, do payment increases the bank account or decreases the bank account, right? If I were to be paying somebody, would my bank account decrease or increase? It will decrease. On which side? On the credit side. Hence, we said the bank decreases on where? On the credit side, but increases on where? On the debit side. Therefore, if I were to be receiving money from somebody, then my bank account will increase. On which side? On the debit side, right? In which then journal do we record the payments, right? In the CPJ or in the CRJ? We record the payments on the cash payment journal, right? CPJ. So let us go back a little bit. The payment results to a decrease in the bank account, right? A decrease is being recorded on the credit side of the bank account. And also the payments are being recorded under the CPJ, of which is the cash payment journal. So if ever we were to be recording, remember that a bank account is a ledger account, but a CPJ is a journal. So, based on the accounting cycle, you know that we have to record on the journal first, then from the journals to where? To the ledger accounts, right? So the payments are being recorded where? In the CPJ first, then being transferred from the CPJ to where? To the ledger account, right? We record the payments on the CPJ, then from the CPJ to the credit side of where, then we take the total from the CPJ to the credit side of where? Of the bank account. And as for money is received, if I were to be receiving money, that will be recorded under the cash receipt journal. Then from the cash receipt journal, the total is being transferred to where? To the debit side of the bank account, since it increases what? Since it increases the bank account. All right. A favorable bank balance is on the debit side. Now, what you must know is that in this part of accounting, we've got terms like favorable and unfavorable. Favorable means positive or plus, right? And unfavorable means negative, right? The plus sign is on which side of the bank account? Is on the debit side, where the bank account is increasing. And the negative sign, of which is unfavorable, is on the credit side, in which the bank is decreasing. Therefore, the balance, if they say the balance is favorable, meaning it is positive, it will be reflected on the debit side. But if it is unfavorable, then it is negative. It will be reflected on the decreasing side of the bank account, of which is, of course, the credit side. I hope you guys know that. Since we are doing the revision for term 1 topic, of which is the bank reconciliation statement. Right. Also, you need to know the difference between the bank statement and the bank account. These are two different things, but they record similar transactions. Therefore, they must have the same balances, since they record similar transactions. There is a difference between a bank account and a bank statement. Now, let us look at what is a bank statement. A bank statement is a statement that is being prepared by the bank. It reflects what the amounts that are being deposited and being withdrawn, and also the balance, right? a statement is being prepared by the bank, and to get the statement, one must go to the bank and print it out, right? On a statement, you'll see that it reflects the money that was deposited into your account and the monies that were withdrawn, and also the balance that you are left with, right? So the bank statement is being prepared by the bank. So on the bank statement, there are no, if there were to be any mistakes, the business cannot make any changes, right? You need to know that we cannot make any changes on the bank statement. That's why we do the bank reconciliation. If there were to be any errors, mistakes, and or omissions on the bank statement, we need to prepare a bank reconciliation. If I make the mistake in my bank statement, I didn't withdraw this amount of money, then the bank will check and correct that, right? So the bank statement is being prepared by the bank, such as FNB, Capitec, etc. So the statement is being prepared by the bank. The business cannot make any changes on the statement. Whereas a bank account is a ledger account that is being prepared by the business. It also reflects what the amount that are being received and paid by the business, right? And also the balance. Now, do you see that these two things, the bank statement and the bank account, record similar transactions, the monies that are being deposited to the bank, the monies that are being received, paid, withdrawn, and also the balance. Now, so that's why these two things needs to have the same account, same balances, right? Therefore, the total of the two must be equal, since similar transactions are being recorded on both the account and the bank statement. So most of the time they do ask questions like, why do the bank account balance need to be the similar to those of the bank statement? It is because similar transactions are being recorded on both the bank account and the bank statement, right? What you must know is that it is important to note that the bank account increases on the debit side and decreases on the credit side. But as for the bank statement, so for the bank account, the favorable balance will be on the debit side and the unfavorable balance will be on the credit side. But for the bank statement increases on the credit side and decreases on the debit side. So the bank statement is an opposite of the bank account. You need to know that the bank statement is an opposite of the bank account. So if we're to be preparing the bank reconciliation statement, on the debit side, it will be decrease, and on the credit side, it will be increase, right? That's what you need to know. The bank statement increases on the credit side and decreases on the debit side, right? Going back to the bank account, we said that the bank account is an asset, right? That's why it increases on the debit side and decreases on the credit side. Now, the question that rises now, it will be, why does the bank statement increases on the credit side and decreases on the debit side? It is because to the bank is owing the business, since the business deposited their monies in the bank. Therefore, the bank statement is a liability, right? It is a liability. So the bank would regard the business as what? As a creditor. Therefore, the bank statement will be recorded under liabilities when looking at a bank at a bank's perspective of it. right? What you need to know is that the liabilities increases on the credit side and decrease and it increases on the credit side and decreases on the debit side. Therefore, the bank statement is what is a liability to what? To the bank, not to the business, right? The bank account is an asset to the business. But these two things record what? Similar transactions. Then they need to have same balance, right? So this implies that for every transaction that is on the debit side of the bank account must be reflected on the credit side of what? Of the bank statement. If not, then we need to check who made an error, who made an omission, who made the mistake, then we correct that. For every transaction that is on the credit side of the bank account must be reflected on the debit side of the bank statement. If there were to be any errors, mistakes and or omissions, then we check as to who made the mistake, then we correct that. The process of correcting those errors, we said it is a bank reconciliation. And to do the bank reconciliation, we do what? We prepare the bank reconciliation statement. So this explains why does the bank statement increases on the credit side but decreases on the debit side. It is because the bank account is an asset. That's why the bank account increases on the debit side and decreases on the credit side, right? But a bank statement is a liability to what? To the bank. I've already explained that. Right. Now, we are now getting onto today's matter, right? All the transactions that are incorrectly recorded on the journals, right? So the transactions that are incorrectly recorded, when I'm talking of journals, I'm talking about the CPJ and CRJ in this case, right? So if there is an error in the CPJ and the CRJ, that implies that automatically there will be an error in the bank account because the totals are transferred from the journals to where? To the ledger account. So if we made an error in recording in the journals, then that with that error we'll be transferring the incorrect total to where? To the bank account. So if we made the errors in the journals, that error must be recorded where? Must be corrected where? In the journals, right? For example, if I were supposed to record that I paid 5 rands to somebody, but I recorded that I paid 3 rands. I recorded in the payments, I recorded on the CPJ, then I recorded on the CPJ. Then I transferred that total of 2 rands to the bank account on the credit side. Now, do you know, do you now see that I've transferred this incorrect 3 rands to the bank account? Now, when the bank we printed the bank statement, it reflected that 5 rand was paid, and also that it is the bookkeeper who made an error, right? So it needs to be corrected. To correct that, we need to add the 2 rands to make it to be 5 rand. We add it on the CPJ, then transfer that 2 rands to the bank account on the credit side. Then that will sum up to 5 rands. That 2 rands to plus 2 rand, that will give us the total of 5 rand. So that is to say that if there were to be incorrect transactions that are being recorded on the journals, they must be corrected in the journals, right? But those that are made incorrectly or recorded incorrectly in the bank statement, they must be corrected in a bank reconciliation statement. You need to know that. Let me repeat it. Errors that are incorrectly, transactions that are incorrectly recorded in the journals, they must be corrected in the journals. But those that are transactions that are incorrectly recorded in the bank statement, they must be corrected in a bank reconciliation statement. Example, the business received 45 rands. If we received the money, we'll record it on the CRJ, then from the CRJ to the debit side of the bank account. And this was correctly recorded in the statement. So it was correctly recorded in the statement, but incorrectly recorded in the journals as 54 rand. Do you see now that the bookkeeper or the accountant made the mistake and swapped the figures around from 45 rand to be 54 rands? Now the amount is extra. So in the business book, it is being recorded that we received 54 rands, whereas we received 45 rands. Now we need to correct this. The money recorded in the journals is extra with 9 rand. Since an error is being made in the journals, then it will be corrected where in the journals. The statement is correct. The error is in the journals. So we will correct the error where in the journals, right? The money is extra with how much? With 9 rands, right? We said we recorded 54 rands in the CRJ where we record monies received, right? So that 54 rand is extra with how much? With 9 rand. Now, since this error is only made in the journals, therefore it must be corrected in the journals, which will affect what? The bank account, right? Since you know that from the journals to the bank account. Now, how do we correct this error? We are supposed now, because the bank account was increased by 54 rands, of which is incorrect, right? We were supposed to increase it by 45 rands, right? So to correct it, to take these 54 rands back to 45 rands, we must do what? We must subtract this 9 rand, right? When subtracting this 9 rand, meaning we are decreasing the bank balance by how much? By 9 rand, right? I hope you guys understand that. We are decreasing our bank account by 9 rand. It was increased by 54 rand instead of 45 rand. So there is this 9 rand extra. We need to subtract it, right? So this implies that we are decreasing our bank balance of 54 rand by 9 rand to be what? To be 45 rand. Now, on which side or on which channel do the bank do we record transactions that results to a decrease in the bank account? On the CPJ, right? All the transactions that result to a decrease in the balance of the bank account will be recorded where? In the CPJ. So if we were to be correcting this error, we will record this 9 rand where? In the CPJ. Then from there, the total will be transferred to where? To the credit side of where? Of the bank account. Now, do you see that we've corrected it by only doing what? Recording 9 rand to on the CPJ, then from there being transferred to the credit side of the bank account. That's what we'll be doing on the bank reconciliation statement. We'll be correcting the errors by doing this, right? The answer is that we'll record it on the CPJ. This usually referred to as amount being overcasted. So we've deposited 54 rand instead of 45 rand. So the amount is being overcasted. That means we've added an extra 9 rand by a mistake. So to correct it, we'll record it on the CPJ, right? If the amount is being undercasted, that means that we've deposited less than what we were supposed to deposit, right? Or we've withdrawn less than what we were supposed to withdraw, right? That's what undercast means. But overcast means that we've deposited more than what we should have deposited, or we have withdrawn more than what we should have withdrawn, right? All errors made in the bank statement should be corrected in the bank reconciliation statement. I've stated that the errors made in the journals should be corrected where in the journals. But those that are made in the bank statement should be corrected in the bank reconciliation statement. Now, going back to Miss Mani's case, the Miss Mani's case, the error was made where in the bank statement, not in the books or in the journals of Miss Money, where Miss Money records the monies that she received and the monies that uh, she paid, right? But the error was made in the bank statement, right? Therefore, where should have this error been corrected? In the bank reconciliation statement. So this error should have been corrected in the bank reconciliation statement. Miss Money was supposed to prepare what? A bank reconciliation statement, right? Amount that should have been now let us look at the amount that should have been deposited. It happens that the bank should have been deposited, uh, let us say 20 rands, then it's deposited 5 rands, right? So there is this 15 rand that is missing. Now, to correct that, you need to prepare a bank reconciliation and say there is this 15 rand that is missing. Then it will be deposited. Now, your bank statement will be increased by this missing 15 rands, right? Do you understand that? And also, you need to know that this 15 rand will this 15 rand that is missing will be deposited, will be recorded on which side of the bank reconciliation statement when preparing the BRS. You need to know where to record this missing 15 rands, right? We record it where? On the debit or on the credit side of the bank reconciliation statement. We record it on where? On the credit side. Why? Because the bank reconciliation statement increases on the credit side but decreases on where? On the debit side, right? And also there will be a case where there will be checks that are not presented for payments, right? Or outstanding checks. Remember that a check will, tomorrow on our next session, will be looking at what are checks, right? Remember, a check is not a money, but a promise, right? It's just a paper, right? A special paper written that you need to withdraw a money in somebody's account, a certain amount of money in somebody's account, right? I can issue a check today dated tomorrow. That means you can only access your money tomorrow. Then that check, if you haven't yet changed it and presented it to the bank to get your money, will be recorded under outstanding checks. These are checks that are not yet presented for what? Presented for payment. They are being reflected where? On the debit side of what? Of the bank reconciliation statement, right? The source documents that you will come across when preparing the bank reconciliation statement are checks and also the outstanding checks, the one that I've defined, the checks that are not yet presented for payments. They still check as check that has been outstanding for the period of 6 months or more, right? And also the dishonored check or check marked RD, right? This is a check that is a dishonored check. The reason for a check to be dishonored, it is because of the signature and also because the drawer of the check has no money in his or her bank account. But we'll look more onto it tomorrow. And the post-dated check issued and received, will be looking on that tomorrow. And the bank statement, the sample of a bank statement, the receipts also, right? So tomorrow we'll be defining what is a check, and also looking at these terms the outstanding checks, the stale check, the dishonored check, post-dated check received and issued, and also the sample of the bank statement and the receipts. So you go and prepare yourself on checks and also the bank statement. Tomorrow we'll be looking on that, and also the sample of the bank reconciliation structure. This is the bank reconciliation structure, the BRS structure. When preparing the BRS, the format for the bank reconciliation statement, this is a format for the bank reconciliation statement. We'll look onto it tomorrow. So I will see you guys tomorrow on our next session.